The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the November 10th, the magical Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there's having a great day. Let's make sure we have an extraordinary one. Now, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I are going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know that, what do I want you to know? I want you to know that your request is very important to me. So go ahead and send that off to Steve at TFNN.com. Inside the subject heading, please put radio show question. Now, if you're inside our Tigers Den, well, then any and every ping will do. So let's go ahead and get this show started on Magical Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. So we begin our day here with a bit of a mixed bag. It is the transports that are trading to the downside off 77 points. Dow just went to negative, back to positive. It's up by 9 points out there. The S&P 52 points, 351 for the NASDAQ 100, 136 for the semis out there. You had gold up $85 over 2%, 3.5% for silver, $1.68. Light sweet crude up 14 pennies. Natural gas is up 1 tick. Let's go to the 2-hour time frame charts. The reason that we're going to do that is because we've got 4 TD9 count tops that completed at 10 a.m. So let's go check up on those, see what we've got out here momentarily. I'll get those charts up on our screen. Here we go. Now we're looking to see if anything has gotten back to support. So it's a beautiful thing when we have synergy out there. You can see the completed TD9 count tops. They happened on the bar before we're at right now. That was again at 10. These bars here are going to complete at noon. Now, what should unfold, if you take a look at the ES Mini, it should pull back to test its oscillator and change line, currently printed at 67.83. The NQ, 25.362. The Dow is trading right at its oscillator and change line, so it is testing that level of support. It's trading actually below a profile area at 47.165. So if price closes below 47.103, I believe is the number, at noon, you should see a move towards the 46.804 area. That's its TD9 count breakout level. The Russell 2000 also testing its oscillator and change line, also testing the bottom of a profile. A close below the oscillator and change line at 24.50 would likely signal move towards 24.13. Likewise, if price takes out these TD9 count tops, what does that take? That requires for the ES Mini a close above 68.35.50. For the NQ, it would be a close above 25,657.25. For the Dow, it's a close above 47,421. And for the Russell 2000, I believe it's going to be 2476. It is 2476.90. If you close above that, you negate those signals and the markets continue to move higher. Perhaps the most important time frame charts to be watching. What else do we know about the market? Let me go ahead and close this up, reduce the usage of the CPU on that. Let's go take a look at, let's go to the daily time frame. So on the daily time frame, the NQ is up on that main screen. We're going to go now take a look at each of the daily equity future contracts. We have new profiles that are attempting to form. I say attempting to form because that's what they're doing. They will not confirm until this evening. They have bounced around, so I've gotten different profile levels. The two profile levels that we'll discuss right now are the NQs and the Russell 2000. Both of these profiles wrap around the prior profile. That is a message from a profile standpoint of a consolidating market. Remember, we had that same signal with the last set of profiles for the ES Mini. So don't get too caught up on this market moving to the downside out here. At least these signals and the way the market is traded has primarily been a sideways-ish type move. Now, in the case of the NQ, the bottom of that new profile, 25,047, the top is up at the 26,399 level. The center is at 25,892. It's a very wide profile. Now, we had a completion of a Gartley buy pattern for the NQ. We had a completion of a Gartley buy pattern for the ES on Friday. We did not get a bullish reversal candle inside of the Dow to generate the same. A bullish reversal candle today would in fact do that. And the Russell 2000 also forming a Gartley buy pattern with a bullish hammer candle on Friday. That makes Friday's lows really key. Why? Because we like to have an expression which is if you close below the low of bottom, well, if you're long, you're wrong. Right now, being long is the right thing. And right now, we're taking a look. Is this going to be just a couple-day rally out here? Well, these new profiles ought to assist us, and we'll have more assistance on that come this evening, tomorrow morning. But I will not be able to host a show tomorrow. I'm in a Veterans Day event out there, and the timing just doesn't work out for me to be able to do that show. That is unless, let me take a quick peek, see if I got an answer. Yep, okay, no. So I won't be able to do a show with you tomorrow. But what I will do, though, inside the Tigers Den, be a good reason for you to be part of the Tigers Den in the morning, is I'll at least post this chart of the daily equity future contracts. That way you'll know whether or not these profiles have taken hold, and even if they have taken hold, what those levels are in case they shift out here. So that's what's going on the daily time frame. What's really needed, though, for a rally to sustain itself is going to be for that spot VIX index to get below its 50-day exponential moving average. So let's go check on it. Let's check on the advanced decline oscillator as well. It is trying to get above the zero threshold level. Right now it's at -8. If it can close above the zero threshold level today and tomorrow, that would then signal that buyers have an edge over sellers. In the case of the VIX, it needs a close below 1755. 1755 is the current 50-day exponential moving average. Now, Friday's candle, just like it was the opposite of the S&P, Friday's candle in the S&P, ES Mini at least, was a bullish hammer candle. In the spot VIX, it was a bearish shooting star candle. Now, we've had follow through to the downside. Odds favor that the spot VIX will at least test that 50-day exponential moving average. Doesn't have to be today. 1755 is the current number. Now, if we close below that for 2 consecutive sessions, price ought to make a move down to its rising trend line, and it's because price would be below its 50-day exponential moving average. That would give buyers an edge. So if we go back and take a look at the daily equity future contracts out here, if we get below the 50-day exponential moving average, why aren't you going out there? There we go. If we get below that, the ES Mini at a minimum will target its oscillator and change line at 68.49, but perhaps it'll test the top of that profile at 68.94. Let's take a quick peek in at the Perigee pivot points. Also areas to be watching for these equity future contracts as should they continue to rally. I think what we'll see here is that the Russell 2000 found resistance at its Perigee pivot point, as did the ES Mini. We closed just above it, and those are the blue lines that are out here. That was basically last Friday's close and last Sunday evening's open. If you want to go set those lines on your chart out there, those are the blue diagonal lines. For the ES Mini, it's right about the 68.27 level. For the NQ, we're not up there just yet, but that's right around 25,734 or so. In the case of the Dow Equity Future Contract, really the top of that's going to be at about 47,470. And in the Russell 2000, which you can see has tested, rejected it, generated a bearish reversal candle to form a Rhodes Momentum Indicator top. Really needs to close about 2476 is its number. Now, if we take the natural gas, it pulled back this morning, and it pulled back right to its Perigee pivot point. So that's a beautiful thing, and in doing so was also forming and completing a TD9 count pattern.
Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. Hey, before we go to this break, and sorry for running into the last break, my eyes weren't on the clock out there, but let's go take a look at the equal-weighted ETFs out here, see what kind of signals they're sending to us. The QQEW is one that pops up on our screen first. Now, what you'll see here is this formed a TD9 count top, and Friday's action found support at its breakout level, and that's at the 139.90. Now, it doesn't have any kind of bullish reversal candle or anything like that to form some type of Gartley buy pattern, but getting back to a breakout level and holding can, in fact, be a bottom. Right now, price is trading with inside its profile. That range is 139.69 to 144.40. If we take a look at the equal-weighted ETF for the S&P 500, price also testing and rejecting that TD9 count breakout level, 186.43. Price trading with inside its profile. It says watch 188.90. That's the top of the profile. You close above that, that would be a bullish signal. And to the downside, 186.16 is the bottom of its profile. The equal-weighted ETF for the Dow trading with inside its profile. TD9 count top as well. Support at 40.18, a sell zone between 40.65 and 40.77. So what we're not seeing here in the equal-weighted ETFs is any kind of breakdown. In fact, getting back to the Dow's actually, it's equal-weighted ETF, much stronger than the others out there. But watch those TD9 count breakout levels. If we were to close below those, that's telling us that we've got trouble in River City. But that is not the message on November the 10th at 11:19 in the morning. Let's get to some of the requests that have come in, or really all of the requests that have come in. The first one coming in from Hector and Patty. They want to take a look at ticker symbol GOGO. So let's pull up that chart up on our screen out here. GOGO, as we speak right now, trading out at the price point of 756. Now, if you take a look at the daily time frame, we had a nice gap to the downside, and that triggered a Rhodes Momentum Indicator signal. Actually, we had a confirmed Rhodes Momentum Indicator bottom back on October 2nd, led to a rally that formed a TD9 count top. That TD9 count top has now led to an A to B equals CD pattern to the downside, and a bullish reversal candle for its daily time frame would generate a Rhodes Momentum Indicator bottom and a buy the D point bottom, but not until we see that. If we take a look at the weekly time frame chart, pulls back, basically stops at the top of its profile, tests the top of its weekly profile. That was from October 4th. I said top of its profile, the top of its swing point. That swing point from October 4th, that high was 763. Volume, 7.9 million shares. Last week, we traded into it 9.8 million shares. So we traded into a swing point, rejected it, said we would be back down there. Well, we are back down there this morning, testing that swing point. Will it go test the low of that swing point? It should, but that you got to close inside that swing point out there. The low, by the way, is at 617. If we look at the monthly time frame chart, the monthly time frame chart is testing profile support. That's at the 726 level, and it's trading inside a swing point, October of 2024. That swing point at the high, at the top of it, is at 747. 27 million shares traded that month, October of 2024. This month so far, we are at 10 million shares. So are we halfway through the month? We're getting pretty close to kind of halfway through the month. 10 million, 20 million. It's might come in with lighter volume, but you need the rejection of the top of that swing point out there. So daily, we're watching for a bullish reversal candle. Weekly, we're watching for price to reject that swing point. And monthly, just waiting for the end of the month out there. So Hector and Patty, hope that helps you out. Let's go take a look at the RGTI. This for Tom. His question, like many people's question, is where is this headed to? Let's go find out. RGTI trading as we speak at 32.74.73 and trading below profile support. So what we didn't get on Friday, we got a nice bullish hammer candle. A slight, and I think it really was a bullish hammer candle. There was a slight gap to the downside, but even if we fill that in, I think it still ends up being a hammer candle. And it was right back at the profile support level of 30.46. So if that were to be a bottom, Tom, we need to see price get back inside its daily profile, quite frankly, because we've been below the center of its bullish structure profile for more than 2 consecutive sessions. RGTI now must close above 38.94 to give us a signal that this is more than a counter trend move. So the weekly time frame chart, let's look at it. It has a Rhodes momentum indicator top. It is trading inside its profile and below the center line. The center line is at 36.31. So it's signaling to you and I that price making move back to 23.21. We're not going there just yet. Why? Because it's got TD9 count breakout support at 30.46 on the daily time frame. It created a hammer candle on Friday. That says support there is at 30.62. So 30.46 to 30.62 could or should be a strong level of support. That may be where price is headed to, Tom. The monthly time frame not really assisting us at this moment in time. So you got the daily top, you got the weekly top out here. We're trading below profile on the daily. Looks to me, Tom, like this really does want to move lower and get back and test that hammer candle at 30.46 level. And that's what it looks like. Take a look at the daily, the weekly, and the monthly. GT writes in, and thank you for your request. GT, thank you for your request as well, wants to take a look at XPEV. And XPEV, if you take a look at the monthly time frame, you'll see no topping pattern out here. You'll see prices trading above profile resistance at 1690, along with its oscillator and change line. So we're trading above last month's high, bullish. If we take a look at the weekly time frame chart, it's trading into a TD9 count top. It tested and rejected that last week. Let's go see what the volume was. The volume on that swing point, March 14th, 104 million shares. Last week we tested with 93 million shares. We tested and rejected it and closed back below it. But we're back inside that swing point as we speak right now. So that test and rejection was a false signal. You're trading about profile resistance and its oscillator and change line and into that swing point of that TD9 count top, looking like price might go target 27.16. The daily time frame chart needs a close above the candle from October 2nd to negate its Rhodes momentum indicator top. That is at 24.53. We're at 25.02. So you close today above 24.53. The daily, the weekly, and the monthly charts are signaling higher price, with that higher price likely targeting the TD9 count top on a weekly time frame, 27.16. So I hope that helps you out. You also wanted to take a look at the Hang Seng out here. Let's go take a look at the Hang Seng. I think you said the Hang Seng was at a 52-week high or something like that. Here's what the Hang Seng is doing. If you look at that monthly time frame chart, it's got a TD9 count top that is completing this month. At the end of this month, price should pull back towards the oscillator and change line, 23,855. We can see descending trend line at levels that have held out here. So the Hang Seng is signaling to you that this wants to pull back. That's the monthly chart. The daily chart has a Rhodes momentum indicator top. Price still remains below its green oscillator and change line, so it's still bearish looking. The daily time frame for the Hang Seng closed above a swing point from October 30th, and that could be signaling an A to B equals CD pattern to the upside. I don't have volume, so I can't confirm that with volume. What we can do is at least draw in the A to B equals CD pattern out there and give you a price projection should it rally further. And the daily time frame says, yeah, it should or could. Give me a second here while I try to get this to work properly. There we go. So the A to B equals CD gives you a price projection around 29,645. So 26,945. Don't worry, I'm a little dyslexic. 26,945. Well, that's what the daily signal. Monthly says we're likely to head lower, and not until you close above the high from the week of October 3rd out there on a weekly chart. That number is 27,381.84. Not until you close above that will it really get into any kind of bullish ways out here. Steve Rhodes with TFNN. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day, Before investing, carefully consider a fund's investment objective, risks, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. Let's take a look at the seasonal pattern here for the S&P 500. Just kind of remind us where we might be. I say might be because right now I believe that the pattern that is in effect from a seasonal standpoint is just a normal seasonal pattern, not a post-election pattern, which I can show you what that looks like. And it's the one that's been in place, in essence, for the last 25 years. Now, I make that conclusion. It could be wrong, but it's based upon the fact that this seasonal structure over 25 years typically bottoms around October the 10th. October 9th, October 10th. That's exactly what we did this year. Right now, we are in this in this little bit of a zone where we see a lot of sideways, choppy type action that typically lasts until the just before Thanksgiving. This shows on average around November 20th before the Santa Claus rally, the next leg of the Santa Claus rally resumes itself. Now, that's what this seasonal pattern is showing us. If I take a look at the charts, we're getting really the same message out here. What do you mean, Steve? I read all kinds of stuff, and I get people that send me emails telling me that I'm dead wrong, maybe I am, that there's a major bear market that's about to begin. My position is not even close. Why is that? There's a reason I use the daily and the weekly and the monthly charts when we take a look at things. And that reason is when I was doing my studies many years ago, and the first study that I was doing, well, or not the first study, but one study that I was doing, I downloaded the New American Ephemeris. Didn't download. I paid the guy to give me a download worth 300 years worth of data, and then had another programmer write a program that I could drop in. I was using Ensign Windows at that time, and I could just drop in any celestial, any lunar event and see if it identified tops or bottoms out there. And I didn't see that, and I was certainly looking at the major tops that were out there. What I did see that was out there, I did see topping patterns that had formed. It was typically Rhodes momentum indicator tops, but not always, that there were topping patterns that were present for the daily, weekly, and monthly. Period. So then I went back and studied every bear market to see, and not just U.S. bear markets. It was commodity bear markets. It was the Nikkei. You go back and look at them and all have that exact same pattern. Now, if you look at the monthly chart as we speak right now, there's no bearish pattern. Period. Now, maybe at month end, we get a bearish reversal candle, and of course, we would need to close below its oscillator and change line to signal that maybe we're going to get a 2 to 3 month retracement out there. That would be normal, but that's not the pattern that's in place today on November the 10th. In fact, the weekly time frame chart does not have a topping pattern. It negated that topping pattern a couple of weeks ago. Just the daily as a TD9 count top. What I can share with you with certainty, with 1,000% certainty, is there's never been a bear market, the kind where you get a 20% move to the downside without having tops present for the S&P or any indice out there, quite frankly, for its daily, its weekly, and its monthly time frame. And then when you put together what's going on inside those daily profiles that are forming or are attempting to form that are telling us about a consolidating market, and then we put that together with regard to the seasonal pattern out there, well, you kind of get the picture out here. And we haven't really busted through any key level of support on the S&P 500 as we speak just yet. Okay, so I thought I would just share that with you and maybe quiet down some of those emails that are sent to me. But keep sending them if you must. Let's go take a look at TGB. This is from Dan in New York. Let's go see what TGB is doing. It's trading out as we speak at $4.55. It's trading up towards the top of its daily profile. That's at $4.59. It's trading inside a swing point on a daily base from October the 9th. 7.6 million shares traded that day. So far in 2 hours of trading, we're up with 1.7 million shares. So that's about 3.4 or about 5 million or so, 5 million going into a swing point that's got 9 million. So kind of light in the loafers. Don't necessarily expect it to bust through this profile, at least today. But right now, you've got just a consolidation with inside that profile, 428 to 459. The weekly time frame chart has a Rhodes momentum indicator top that actually formed on October 17th. As that was forming, price was doing what? Testing that green oscillator and change line. Price has tested it for the last 3 weeks out there, and now we're trading above profile resistance. So in order for TGB, Dan, to get into its true all-out bullish mode, it's got to close above the high of 484, and you'd like to see it do it on a on a weekly basis. A daily basis negates the daily Rhodes Momentum Indicator top. A weekly basis at close above 484, it negates that top. The monthly time frame says you're going to get a TD9 count topping pattern at the end of the month. Now, that pattern might complete or possibly can complete in December. It's only bar number 9 that we're working on. Bar number 5's closed. You'd have to have really a huge move to the downside between now and the end of the month to close below 307. If you got that, then that pattern would go away. But the Rhodes Momentum Indicator top would likely take hold out there. So that's what I see with TGB. Consolidation on the daily. We've got those levels. The weekly says I want to move higher. It's waiting on the daily to kind of kick in, and the monthly's just going along with what the daily and the weekly are doing because it knows it's going to form a TD9 count top between this month and next month out there. So that's what I see, Dan. Thank you for taking the time to write in. Dan, another Dan, not from New York. Well, I'm not sure if this Dan is from New York or not, but this Dan wants to take a look at IOVA, and the question is really, are there any new profiles? So I think it's still the same profile that we're dealing with. That's between, on a daily basis, 207 in support, sell zone between 224 and 235. Now we're trading above 235. We most certainly are. And we're trading right up into its TD9 count breakdown resistance level. So Dan, the number that you're looking for price to go above, because you got into a long position, I believe you said on Friday, you'd love to see this close above 246. If you do that, then you're going to have a change in trend on a daily basis to the upside. The weekly time frame, let's move this out. You had an A to B equals CD pattern to the downside. It was confirmed a buy the D point bottom pattern out here. Now we got price trading above the top of its profile. So there's nothing on the weekly chart that's holding it back. It's the daily TD9 count breakdown resistance level where the guns are ablazing. 246. You close above that. That's a beautiful thing. You likely head up towards 472, the bottom of the monthly profile. But before you get up there's probably some other resistance levels, although the only other resistance level I see out here is really a swing point on a daily base from August 19th. Volume there, 34 million shares. So far today, and we've tested it, 13 million shares. So you've got, it's like a 39 million share day going into 34 million share. So that's positive. Nonetheless, you got to get above that, Dan, you got to get above that 246 number out there. So hope that helps you out. Thanks so much for taking the time in. No, you didn't start a new no, okay. This is not a new position for you. This one that's coming up is. My apology for screwing that up, but just kind of normal for Stevie. Let's take a look at PALI out here. So when I take a look at PALI, it's trading below the bottom of its daily profile, probably what it's gunning for. That's at $1.82. If it can, what it really needs to do to tell you, well, to tell me, to tell the profile that it is more than a counter trend move is close above 192. Why? Because price been below 182 for 1, 2, 3, today being a fourth day. Not that that matters or not. You have 2 days or more below profile. Then when we take a look at that profile, we're trying to understand where a counter trend rally unfolds. In this case here, being $1.92. The weekly time frame, Dan, $1.96 is a key level, and you have profile resistance at 211. Steve Rhodes with TFNN. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. Let's go check in on ticker symbol BLDR. This is for Snowball. And Snowball is short, and he's asking, should he stay short out there? Well, let's take a look at the daily time frame. The daily time frame on Friday completed a TD9 count bottom pattern. And if price were to close below that low, that's at 107.48, then that would say strong momentum move to the downside and stay short. Now, that strong momentum move to the downside would suggest a target of its weekly swing point from June 6th. That swing point has volume of 10 million shares. We closed inside that swing point last week with 10.9 million shares. It actually had 10.3 million shares. So you can say it closed inside that swing point with volume. What that suggests is that swing low should be tested. That's at 102.60. Now, if we look at the monthly time frame chart, so on the daily time frame chart, you could get a rally that would take you up to its oscillator and change line, currently at about 111.38 or so. So the question is, if you get a rally like that up to that level, does that really, substantially change your outlook on that position? That at this stage here would be a resistance level, and we're trading below profile support as well. So even though you got that bottom pattern, it's somewhat suspect. And the weekly trading below profile support, it's red oscillator and change line into that swing point with volume. Saying, hey, I might want lower price out here. And the monthly chart is testing its swing point from back in June of 2025. Price is trading below its bullish structure profile. The month is not over. The swing point has volume of 45 million shares. So far, you've done volume of 11 million shares. Look, it's coming into that swing point with lighter volume. So that could be and if it was coming in with volume, you'd say stay the course on this one. Here's what I would say, Boulder. We haven't seen a close on a daily basis above a prior day's high for quite some time. The last time was on October 21st out there. So another way you could look at this, the simplest, which is sometimes simple is better, until this can close above a prior day's high out there, pressure is definitely to the downside. So hope that helped you out, Snowball, with regard to that request, and thanks so much for giving it. Duncan Steve wants to take a look at a couple instruments. First one's going to be AA out here, those AA batteries. You've got, so check this out. I've got a couple different rangefinders. One is one that I've had for like 35 years. It's my favorite rangefinder. Why? It's a laser rangefinder. It's a point and shoot, and it gives you the exact yardage to the pin. You got to have those little crystals inside there. And I've always carried with me a spare battery because when that thing goes, it goes, and I need to know what the yardage is. So I changed that battery, and it didn't work. I said, okay, maybe it's a bad battery. Come home, open up a new package of batteries. They're not double A's. They were the square rectangle ones, whichever ones those are. And put in 2 batteries, and it doesn't work. So I go on eBay, and I find another one of these units. I assume the electronics in there somehow gave way. I find one for like $60 or what have you. What the heck? I go ahead and order it. I put in another battery, and that doesn't work. I'm like, what the heck? It was a bad package of batteries. New, unopened. Now, again, I don't know how new they actually were. I don't think they had a timestamp on it. But anyways, now I have an extra rangefinder. I'm going to give that to a buddy of mine as a gift out there. So he doesn't know it, but I know it. Anyways, let's take a look at AA out here. AA is trading above the top of its daily profile and its green oscillator and change line. So, Dunk, that says to Stevie that this wants to rally higher. Its price target is trading inside the swing point from back on October 23rd. Volume there of 20 million shares. We're up today with 2 million shares. So you're going to come in much lighter. Doesn't matter. Signals are pointing to a rally. Now, that's going to be day number 4 of consecutive moves higher out there. So you could be experiencing, come after today, a 2-bar retracement, a 2-day retracement. On the weekly time frame shows that price is trading with inside its profile. It's a new profile that formed last week. Your resistance level out here, Duncan, is 39.40. Support 35.51. A couple weeks ago was a bearish reversal candle that confirmed a sell the D point. So the weekly does have a sell the D point top out here. But price is just consolidating with inside its profile and trade above its oscillator and change line. More neutral than it is bearish on a monthly time frame. Consolidation with inside a bullish structured profile. 42.52 is the number out there. That's the top of that profile, likely where price wants to head to. So the daily, even though it's moving higher with lighter volume, says it wants to continue to rally. The weekly says, well, first I've got to take out resistance, which is this profile, and that's at 39.40. If you can get that, then you start to get up back to those highs out there, Dunk. So let's go take a Qualcomm as well. That was another request of yours, QCOM. Let's see what it is doing. We've got Qualcomm right now trading out at the price level of 170.41. It's consolidating inside its daily profile. That's after having formed a TD9 count top. The profile that is consolidating in has support at 166.45, resistance 175.23. We've got a sell the D point top on the weekly time frame. Bearish shooting star. Price is trading inside a bullish structured profile. Support or a buy zone between 163.87 and 169.13. Resistance 179.65. On a monthly time frame shows a very large profile, bullish in structure, price trading above the center, trading above its green oscillator and change line. As long as that condition remains, it's being tested, the oscillator and change line 169.02. But as long as that condition remains, we ought to see a further rally. So that's what I see when we take a Qualcomm out there. Steve, I hope that helps you out. Thanks for that request. Yvonne writes in, and Yvonne would like to take a look at Costco. COST is a ticker symbol. Let's go see what this is doing. It's printed out right now at 9:10:06, heading back to the bottom of its daily level of support. Its profile at 908.73. We're trading into a hammer swing point candle from back on September 29th. 4 million shares traded that day. Today, we're at 1 million shares, so a little bit lighter in volume. If price were to close below 908.73, the level you got to watch out here, Yvonne, like a hawk, is the bottom of that hammer candle, and that's at 903.29. Will we get down there? Hey, we close below 908.73. It increases the odds of that. In the case of the weekly time frame chart, a swing point that had volume of 11 million shares was taken out with 16 million shares. Costco, on a weekly basis, which has a TD9 count top, that's where I'm going to start my A to B equals CD pattern. Now what we're going to do is just simply copy, paste, and soon we'll assemble it. Here's the copy, here's the paste, here's the assembling. You got an A to B equals CD to the downside. That takes you towards 853.53. Its TD9 count breakout level, Yvonne, is at 871.71. That could be a pit stop. Monthly chart, Rhodes momentum indicator indicator top price has a bullish structured profile. The buy zone between 850 and almost where we're trading right now at about it's at 907. We're trading right now at 910 out there. So you got to watch and see how this plays out. And as long as it stays within the September 29 swing point, that range, 903.29 to 917.22, we could see a move lower. Yvonne, you also want to take BA out here? Let's go see what that is doing. Is that Boeing? BA trading out as we speak right now. We might have to finish this off when we come back to you're going to get a TD9 count bottom pattern today. It's going to go ahead and complete tomorrow. In other words, you have a buy signal. That buy signal or buy pattern should rally up towards the oscillator and change line. That's at 200.81. If it closes above that, you ought to get up to the 213 level. We come back to this break. We'll finish taking a look at BA for Yvonne. Steve Rhodes with TFNN. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. Yvonne's question is buy, sell, or hold out here. And Yvonne, you've got the weekly and the monthly charts are saying sell. And the daily chart is saying buy, whether that buy is today or is tomorrow because of its TD9 count pattern. Now, it's got to get above that red oscillator and change line. There was a TD9 count bottom that formed out here on September 16th. We ended up trading higher for a couple of days out there, and then we gave up that bottom signal back here on September 22nd out there. So this one is, now the daily can turn things around. That can turn things around so the monthly gets back above the bottom of its profile, and that's at the 197.17 level. The weekly really needs help out there. It needs a new profile or something to form. So hope that helps you out, Yvonne. Let's go take a look at AT&T, ticker symbol T. This for Mick inside the Tiger's Den. Mick, this has a daily Rhodes momentum indicator bottom pattern. Here, price is traded above its red oscillator and change line, so that's a good thing. It ought to rally up towards the bottom of its profile. That's at 25.62. Your preference would be the weekly time frame chart does not have any kind of bottom signal. We're trading below profile support. It's oscillator and change line. Nothing to tell me why it should stop right here. And the monthly chart, which has a Rhodes momentum indicator top, is signaling to us that it wants to get back towards its buy zone between 21.85 and 22.65. So you got a daily bottom. You're likely to rally for a few days out there, but until price closes above at least 25.62, it's just a counter trend signaled move for you. So I hope that helps you. Let's take a quick peek in at the markets out here. Let's go back to those daily equity future contracts. Just a reminder, now I just want to see if the profiles are still here. So the NQ's profile still wraps around the prior profile. That says to prepare for a sideways consolidation. The same thing is true with regard to the Russell 2000. No new profile on the Dow. The ES Minis profile is between 67.45 and 68.94. So folks, stay tuned for all the great programming. Again, I won't be able to be with you tomorrow. My apologies for that. But I will make sure that Wednesday's show is a beautiful one. So have a magical Monday, a terrific Tuesday, and I'll look forward to seeing you on wonderful Wednesday. Take care and be safe out there.